All right, folks, buckle up because today's news is a game changer. The latest Consumer Price Index, or CPI inflation report, just dropped and it's shaking up the financial world. So let's dive right into it. First off, what exactly is the CPI? In simple terms, the CPI measures the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. Think of it as a snapshot of the cost of living. When this number goes up, it means inflation is rising, and when it goes down, inflation is cooling off. Now here's the kicker. Based on the latest CPI report, inflation has shown a noticeable decline. This is a big deal because it directly impacts the Federal Reserve's decisions on interest rates. You see, when inflation is high, the Fed tends to raise interest rates to cool things down. But when inflation starts to ease, they have more room to cut rates to stimulate the economy. And guess what? That's exactly what happened today. The Fed has announced a significant cut in interest rates. This is huge news for borrowers, investors, and the economy at large. Lower interest rates mean cheaper loans for businesses and consumers, which can lead to more spending and investment. Essentially, it's a move to keep the economic engine running smoothly. Let's break down what this means for you. If you're a homeowner with a mortgage, you might see your interest payments go down. If you're in the market for a new home or car, now could be a great time to lock in a low rate. And for investors, lower rates can mean higher stock prices, as cheaper borrowing costs can boost corporate profits. But hold on, it's not all sunshine and rainbows. Lower interest rates can also mean lower returns on savings accounts and bonds. So if you're a saver, you might need to look for alternative ways to grow your money. All right, let's summarize. The latest CPI report shows a decline in inflation, prompting the Fed to cut interest rates. This move is designed to stimulate the economy by making borrowing cheaper. While it offers plenty of opportunities, it also comes with some trade-offs, especially for savers. So what should you do next? Stay informed and consider your financial goals. Whether you're looking to buy, invest, or save, understanding these shifts can help you make smarter decisions. And that's a wrap for today. If you found this breakdown helpful, don't forget to hit that like button and subscribe for more updates. Share your thoughts in the comments below. Until next time, stay savvy. Stay